Let's take a look at the oil and gas sector, where an important bottom may be forming in the price of oil. Looking at a longer term chart of oil, we can see that over the last 10 years, we've seen a parabolic spike in oil, which in 2008, this is where we were supposed to be running out of oil and peak oil was occurring. And then we had this stage 4 collapse during the financial crisis. Oil based out in early 2009 and broke out into a stage 2 advance that lasted a couple years. Then, when oil topped in 2011, it went through a 3-year stage 3 topping process with a lot of false breakouts and a lot of kind of sloppy, volatile price action, which ultimately resolved itself into a stage 4 decline in 2014, where oil really dropped precipitously for about a year, and then the stage 4 continued to go on with two fake rallies that failed in 2015, to where ultimately our oil bottomed early this year, and this is where we were supposedly never going to run out of oil, and oil was going to go back down below $10 a barrel. And since then, we've climbed back above the 30-week moving average, and we're still holding above it as we speak in late August 2016. And notice how the volume in oil has really picked up over the past year and a half, ever since oil's been getting near a bottom. And really, this year, the volume on the oil contract has jumped above 3 million um, contracts consistently on a number of weeks this year, which is kind of what you see towards the bottom of a bear market. You see a lot of shares changing hands when buyers start to overtake sellers and a new bull market is forming. Now, looking at the weekly chart on a more current basis for oil, I really like this inverse head and shoulders pattern that's forming in the price of oil, where we have a head over here, or a shoulder over here, the head, and then another shoulder forming over here, which could be setting up the retest and the new stage 2 advance that could be forming on this bottoming pattern. And what you see in these bottoming patterns in stage analysis, in these inverse head and shoulder patterns, is when the left head and or left shoulder and the head forms, the 30-week moving average is typically still declining, but once the right shoulder starts forming, you see the 30-week moving average flatten out. And as long as the price action holds that moving average like it's doing here so far on this retest, the shoulder forms, and then typically you get a breakout and the new stage 2 advance forms. And we have the neckline right here at $50 a barrel. So as soon as oil can get above this price level, it's really going to be a good signal for the bulls. And notice how the price of oil is now outperforming the S&P 500, which is a critical component to stage 2 markets. Taking a look at the oil energy stocks, we can see this kind of same type of inverse head and shoulders pattern, but the right shoulder is kind of flatter, and we're already kind of breaking out actually in the oil and gas stocks, which is a good sign actually that these stocks are leading the price of oil and actually already breaking out of this bottoming pattern. And notice that they're also outperforming the S&P 500. The oil services stocks are actually the laggards so far of the oil and gas sector, but that's actually fairly common, because once the oil and gas drillers start getting a better financial condition, they can spend money on exploration, which is what drives the money into the oil and gas services sector. So even though they're lagging, they're still at this inverse head and shoulders pattern, and they're threatening to break out if the OIH ETF can get above 30, and they're trying to peak back above that outperformance of the S&P 500 as well. Now, the natural gas stocks are actually leading the oil stocks. If you look at this natural gas index, dollar XNG, you can see that they've actually been above the neckline of the inverse head and shoulders for multiple weeks now, and are clearly outperforming the S&P 500 as well. So this is like stocks that are slanted more towards natural gas seem to be leading the oil and gas sector so far as it's breaking back out into a stage 2 advance. Taking a look at the price of natural gas, after it spiked in 2014, went into the same stage 4 bear market that oil underwent, and then bottomed in early 2016, similarly to oil. And notice that you didn't really get that head and shoulders bottoming formation in natural gas, but you kind of got like a double bottom, over a few month time frame, and then natural gas has broken out above the 30-week moving average and is now attempting to successfully retest the moving average currently and break back higher into the stage 2 advance. And notice that it's also outperforming the S&P 500. Taking a look at some individual oil and gas stocks, Canadian Natural Resources, after bottoming in early 2016, broke back above the 30-week moving average on a massive increase in volume. It did 2 times average weekly volume back at the end of February, and ever since then it's really stayed above the 30-week moving average in a stage 2 advance. Kalin Petroleum is an interesting stock because it, unlike a lot of oil and gas stocks that got absolutely decimated, this stock actually made a low for the bear market back in late 2014, and then bucked the trend of oil stocks all during 2015, made another higher low in 2016, and really as soon as the oil and gas bear market potentially ended in early 2016, had a massive rally on a huge increase in volume. This is really textbook stage 2 breakout here, where it broke above the 30-week moving average on 5 times average volume back in April. So it broke out here, and then it retested the 30-week moving average just a couple weeks ago, and then broke back higher again and is now making all-time highs. So this is like an outperformer stock for the oil and gas sector, and now it's, no one's at a loss now in this stock because it's printing all-time highs. Here's another oil and gas stock, Denali Resources, and this stock is a typical stock of a lagging stock in the oil and gas sector, where you can see this inverse head and shoulders pattern, and it really hasn't even broken back above the 30-week moving average here. And notice how you don't really see, besides like a somewhat of a break to the 30-week moving average back in February, I haven't really seen a massive increase in volume since then, and it's kind of just treading water with oil, but trying to break above the 30-week moving average here and outperform the S&P 500. Same thing with Oasis Petroleum. Again, it's really right at that head and shoulders level, just like the price of oil, taking a little bit more volume. It's still not, really the stage 2 breakout type of volume that we need to see to get the stock back into a stage 2 advance, but it's getting close, just like the rest of the oil and gas sector. And looking at Chesapeake Energy, it made a breakout attempt above the 30-week that failed back in April, but it held ground just like the rest of the sector, and once again it's taking higher volume over the past week and trying to break back into a stage 2 advance as we speak. So overall, the oil and gas sector looks like it's bottoming, and this retest is key to the potential for the energy sector to really be in a bona fide stage to advance, where as long as this price level holds, which it has over the last 2 weeks, and we broke above the moving average last week, the price of oil went up about $4.62 to close almost at $50 a barrel. And really, it's going to be interesting to see what happens over the next few weeks, where this $50 level is key to the stage two breakout continuing, and a new stage two advance being really finalized for the price of oil and the energy sector overall.